Nobody tells beginners this, but this one mistake is quietly draining your account before you ever see your first profit. Listen, most traders think they're losing because of bad entries or the market or bad luck. That's not it. The real problem, you're making mistakes you don't even realize. Hidden trading mistakes beginners make every single day. And these mistakes don't look dangerous. They feel normal, they feel logical, they even feel smart, but they're costing you money. If you've been trading and you feel stuck, confused, inconsistent, pay attention. Because once you see this, you can't unsee it, and this changes everything. Here's the truth. The biggest losses in trading don't come from obvious mistakes. They come from hidden ones. The kind that slowly destroy your account while you think you're doing everything right. Let's break this down. The first hidden mistake beginners make, they think more information equals better trading. So what do? They watch more videos, add more indicators, follow more strategies. And suddenly, their chart is full. RSI, MACD, moving averages, signals everywhere. It feels like progress, but it's not. It's confusion. Because now, every signal says something different. You hesitate, you second guess, you miss trades, or enter too late. And when you lose, you think you just need more knowledge, so you repeat the cycle. This is one of the biggest hidden trading mistakes beginners make, overloading your system instead of simplifying it. Here's the fix. You don't need more information, you need clarity. Strip everything down, focus on price, structure. Where is the market trending? Where is it reacting? That's where your edge begins. Now listen carefully. The second hidden mistake, beginners think being active means being productive. So they take more trades. Every move looks like an opportunity. Every candle feels like a signal. But here's the reality. More trades does not mean more profit. It usually means more mistakes, because the more you trade, the more emotional you become. You force trades, you chase setups, you lower your standards. This is called overtrading, and it's one of the fastest ways to destroy a small account. Professional traders don't trade more, they trade better. Fewer trades, higher quality? That's the difference. So here's the rule. If the setup is not clear, you do nothing. No setup, no trade. Simple. Now here's another hidden mistake beginners make. They think risk is something you deal with after entering a trade. So they enter first, then decide where to put the stop loss. Or worse, they don't use one at all. This is dangerous. Because without defined risk, every trade becomes unpredictable. And one bad trade can wipe out multiple wins. This is why hidden trading mistakes beginners make are so costly. They don't look like mistakes until it's too late. Here's the shift. Risk comes before the trade, always. Before you enter, you already know where you're wrong, how much you're risking, what you're targeting. If you don't know this, you don't take the trade. That one habit separates beginners from professionals. Now pay attention to this. Another mistake that almost nobody talks about. Beginners focus on being right. They want every trade to win. So when a trade goes against them, they hold, they hope, they refuse to accept the loss. Because being wrong feels uncomfortable. But here's the truth. Trading is not about being right, it's about managing risk. You can be wrong and still make money. You can be right and still lose money. That's the game. The moment you understand this, you stop fighting the market and you start managing it. Now here's where it gets deeper. Most beginners don't have a repeatable process. They trade based on what they see in the moment. No consistency, no structure, no system. So every trade feels different, every decision feels uncertain. And over time, this creates stress, doubt, emotional trading. This is the core of all hidden trading mistakes beginners make. No system. So here's what you need. A simple framework, not complicated, not perfect, just repeatable. Here's a basic structure you can start using immediately. Step 1, identify the trend. Uptrend, downtrend, or sideways. You don't trade everything, you focus. Step 2, wait for a pullback. Not the breakout, not the hype, the pullback. This gives you better entries and lower risk. Step 3, look for confirmation. A reaction at structure, a rejection candle, something that tells you the market is ready. Step 4, define your risk. Before the trade, set your stop loss, set your target. Risk only 1% to 2%, no exceptions. Step 5, execute and step back. No micromanaging, no emotional decisions. You follow the plan. This is how disciplined traders operate. Not perfectly, but consistently. Now listen, this is the identity shift you need to make. You are not a random trader anymore. You are a structured trader. You don't react, you prepare, you don't chase, you wait. You don't guess, you execute a system. This is how you eliminate hidden trading mistakes beginners make, by replacing randomness with structure. And once you do that, everything starts to change. Your trades become clearer, your decisions become easier, your emotions become controlled. And slowly, your results improve, not overnight, but consistently, and that's the goal. Because trading is not about quick wins, it's about long-term survival and growth. So ask yourself this: are you trading with a system, or are you reacting to the market? Because that answer determines your results. Now you know the truth. The mistakes were never obvious, they were hidden. But now you can see them, and that gives you an edge most beginners don't have. If this opened your eyes to the hidden trading mistakes beginners make, then you're already ahead of where you were before. Subscribe to Online Trading Hub for more lessons that simplify trading and help you build a system you can trust. And remember, you don't need more trades, you need fewer mistakes.